Hello, everyone. My name is Marilena Harilau, and I'm your hostess for today. Together with me, I have Peter Yosif, our senior market analyst at IronFX.
Nice to meet
Peter, thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So, Peter, what's driving the market today?
Well, I would be highlighting the comment of Fed Chairman Powell in his pre-recorded message that practically stated that the bank will not be able to control a soft landing for the US economy given the current rate hike path of the Fed. And I think that's a key takeaway which more or less tended to intensify the cautious sentiment of the market. Also, I would be highlighting the issue of Russia falling into a default state because practically the US are going to be letting a key waiver lap out, and the Russian government will have to pay but will not be able to pay its bonds, and that could be a substantial issue for the Russian economy. Another issue which tended to make me a little bit worried were George Soros's comments on the Davos meeting, where he practically stated that the Russian-Ukrainian war could evolve into a third global war. He actually highlighted the food crisis and the humanitarian crisis which is coming, given that for the time being, it seems that the Russians are not allowing Ukrainians to export grains, and at the same time, Russia is being set under sanctions. So, prices of grain, of milk, of a number of key raw materials. I expect countries in the Middle East and Northern Africa having a substantial food crisis, which could have also an detrimental effect on the outlook of the EU as well, because we could expect that there would be waves of immigrants leaving Africa and the Middle East for countries like in Europe, which are the closest and most developed. And that could intensify the issue even further. Other than that, I would be highlighting also Lagarde's comments, and I would dare to say that the markets seem to be holding a wait-and-see position right now to see how developments are going to be over the next couple of days.
Okay, interesting. And what about the US stock market?
US stock markets had some mixed results, exactly as a result of this wait-and-see position we have mentioned before. You had indexes which edged a little bit higher, others which remained at around the same levels as before or even dropped a bit. During today's Asian and early European sessions, there seemed to be some movement upwards, but there's nothing definite yet. It was characteristic how Asian markets wobbled, while at the same time, actually a bit later, the Europeans seem to be poised for some gains, but once again, that's nothing definite yet. I would like to see how the American session actually starts to be able to make my mind and actually provide forward guidance on how things are rolling.
Okay, and what's expected to be the highlight for the day?
Oh, definitely the highlight for today is going to be the release of the Fed's May meeting minutes. Now, the
Okay.
document is expected to be scrutinized by analysts and market participants about the Fed's intentions and for a deeper insight into how policymakers are thinking. Overall, we expect that most probably the document is going to remain, or at least maintain, a hawkish tone, show some decisiveness on behalf of the Fed to actually curb inflationary pressures by tightening its monetary policy even further, probably by hiking rates in the next meetings, by 50 basis points rate hikes. And all of that, should the tone and the contents actually exceed the market's already hawkish expectations, we may see the US dollar getting some support, while on the flip side, we may see US stock markets somewhat. So I would expect that the release would be key for the next movements in the next couple of days.
Okay. Across the Atlantic, the pound tended to have some bearish tendencies against the USD, right?
Yeah, definitely the pound got a beating yesterday from the US dollar.
Uh-huh.
The main driver, and it was characteristic how the pair started to drop very intensely at the release of the services PMI figure for May. It was the preliminary release. And the services PMI figure dropped more than expected, beyond market expectations. And that showed that there was an intense slowdown of the services sector of the UK economy. The services sector, which, mind you, comprises around 60 to 70% of the country's GDP. So it's key. And should the services sector actually slow down, the economy may slow down. And that intensified any worries of the market about a possible slowdown of the UK economy. That, in combination with the intentions of BOE to continue to hike rates, practically points towards that slowdown, maybe even a recession, a slight recession for the UK economy. Given also that prices remain at very high levels and accelerate still, that could lead to the phenomenon of stagflation actually appearing before the UK economy. And such a scenario could be now on the horizon and is nearing the UK economy. That drove practically the pound lower. Overall, though, we have to note that in the late American session, during the Asian session, the pound was at least able to regain some ground. And that was a positive. On the flip side, the pound also weakened against the euro. And that was a sign of a broader weakness on behalf of the pound. So we may have some hesitation here for pound traders.
While the euro got some support, correct?
Yeah, the euro support, it was a very interesting read. Most of the support the euro actually got was from Lagarde's comments, where the ECB president practically reaffirmed the notion that the bank will be hiking rates, will be tightening its monetary policy. However, that would be in a gradual pace, no hurry. The bank does not seem to be panicking, and they repeated that. So we would expect a gradual tightening of the bank's monetary policy, which could more or less provide some support for the common currency. At the same time, though, that could weaken European stock markets. I would dare to say, though, it all depends on how fast the hiking path will be, and at the same time, how fast the tightening, because the bank is not only going to be hiking rates, it's going to be ending also its asset purchase program. So that would be another minus for growth in the European economy, hence another minus for European stock markets. At the same time, yesterday we had another surprise. It was quite interesting. We got the PMI, the preliminary PMI figures for May. Overall, there was a drop, which tended to imply that economic activity, the expansion of economic activity in the European area, the Eurozone area, is slowing down. There was one big surprise, though. It was a good one. Germany's manufacturing sector reading rose instead of dropping. And that implied that despite the general economic activity slowing down in the Eurozone, the spearhead of the largest economy in the Eurozone is on the rise, is expanding its economic activity at a faster pace. And we have to note that the particular indicator was dropping for 3 to 4 months now. And there were specific worries about it, about Germany's manufacturing sector, whether it's going to be continuing its slowdown. It did not. And that came as a continuance practically of Monday's releases, where we had the IFO indicators showing that overall the market sentiment in Germany about the next 6 months of the German economy improved, or at least was not so pessimistic. At the same time, current conditions on the ground of the German economy improved as well. And we see now also economic activity in the German manufacturing sector expanding at a faster pace. All of that seems to show some improvement for Germany's economy.
Okay. And how did the Kiwi behave after RBNZ's interest rate decision?
That was nice. Actually, the Kiwi jumped. It could have jumped even a little bit further. However, we see that at the technical analysis later on. The
Mm-hmm.
bank delivered a double rate hike, a 50 basis points rate hike. It actually rose interest rates from 1.5% to 2%, directly skipping the 1.75 part. That was partially a surprise, at least from the markets. We had also warned about this possibility. At the same time, the bulls got additional support. Why? Because the bank, in its accompanying statement, practically clearly mentioned that it will continue to hike rates as long as it takes to actually curb inflationary pressures. So practically the outlook, the monetary policy outlook of RBNZ remains in the positives for the Kiwi, as it's expected to hike rates at a later stage as well and tighten its monetary policy, thus draining the market from liquidity. And that could provide additional value to NZD.
Okay. Does also the neighboring Aussie also gain?
The Aussie, it gains, but it's a little bit more hesitant. The Aussie gained against the US dollar at least, and it seems that there are some optimists at least which consider that the Chinese economy will start to rebound, and that tended to provide some support for the Aussie, as the Australian economy is closely linked to the Chinese economy. At the same time, RBA's hawkishness is still present, it's still being felt in the environment, and practically that tended to also provide some support for the Aussie. I would be highlighting the capex growth rate of Australia, which is due out tomorrow, especially for Australian businesses on whether they actually have the confidence to invest in the Australian economy. And should the growth rate slow down, which would imply some hesitation to actually invest in the Australian economy, that could weaken the Australian dollar. On the flip side, should the rate accelerate, we may see the Aussie gaining further.
Okay. And finally, was the count influenced by UTI prices?
Yeah, look, WTI prices have moved more towards the CAD, but we have some slight bullish tendencies of WTI prices. Also, traders may be speculating the possibility of China slowly raising its output, its manufacturing, thus starting to use more oil, plus the demand side for WTI would be on the rise. That could provide some support for WTI prices. At the flip side, also on the supply side, there is some tightness which is expected to continue, at least from OPEC side. And that could be an additional reason for oil prices to rise. However, for the time being, despite the slight bullish tendencies for WTI prices, we would like to see a jump higher, a clear-cut sign that the market has decided to the direction of the price action for WTI before making any further assumptions. It would be interesting to note, though, that the Canadian dollar may not have gotten the support we would expect from the slight rise of WTI prices, as WTI is one of the main products of the Canadian economy. Actually, oil is one of the main products of the Canadian economy. And never forgetting that Bank of Canada maintains a clearly hawkish tone. So one could expect the CAD to strengthen. On the flip side, though, we have a commodity currency such as the Canadian dollars, the loonie, which more or less is also widely affected by the market sentiment. And because market sentiment is a little bit cautious, we may see the loonie not getting the advancements it actually deserves. And that's why maybe the loonie is still in a sideways motion against the US dollar. That should be about
Interesting.
it.
Great. Thank you, Peter. Thank you, everyone, for watching. Join us after a short break for technical analysis with Peter Yosef.
Hello, everybody. Welcome to the technical analysis part of the presentation today. We make a start with the US, and on your screen right now you can see the 4-hour chart of the USD Index. Now, the USD Index practically measures the reaction of the US dollar against the basket of its counterparts, especially the majors. And we can see there is a clear downward trend line guiding the index, showing exactly how the US dollar has been weakening. And that's since the, let's have a look, 13th of May. Now, we note also the slight rise, the slight bullish tendencies, which were evident from today's Asian session. Yet, our outlook remains bearish as long as the price action remains below the downward trend line. Note, though, that the price action has broken above the 102.05. We would like to see it breaking also the downward trend line in order to switch our bearish outlook in favor of a sideways movement initially between the 102.90 and the 102.05. At the same time, we would expect the movement to be confined within these two barriers. Should the price action for any given reason actually break above the 102.9, we would expect practically a switch in the outlook as well, switching from a sideways bias into a bullish outlook. And that could drive the prices higher to start aiming for the 103.85. 103.85, which provided resistance once, twice, 3 times here. And as an ultimate target for the bulls would be the 104.95, which provided resistance here. It's also practically the highest level in our chart. Could be even go to 105. To the downside, and should the bears actually dominate the scene, we may see the pairs price action reversing direction, breaking the 102.05 and start aiming for the 101, which was a prior resistance line and has now been turned into support line. And lower than that, we would also note the 99.80, providing support and reversing the downward motion here. So in a nutshell, as long as the downward trend line continues to guide the pair, we tend to maintain a bearish outlook for the index. Should the downward trend line be broken, clearly be broken, note we are not talking about just a shift of the downward trend line to the right. No, we need the the price action to clearly break it, that would be signaling a switch also in the outlook of the index from a bearish outlook to a bias for sideways movement between the 102.90 and the 102.05. 102.90 be broken and the price action starts aiming for the 103.85, that could be signaling another change in the trend, this time towards a bullish outlook. Now the RSI indicator is still below the reading of 50, but it's rising. It has a nice steep upward movement, which tends to imply that the market sentiment seems about to be switched. However, I would like to see it breaking above the reading of 50 before taking any conclusions. We do not have the Bollinger Bands. Let's add them. Through indicators for trend, Bollinger Bands. Yes, we would like the 20 period. Deviations 2. Yeah, the same picture. It's a similar picture like the RSI. The pair practically has been on the rise, aiming for the mid 20 period. So we would expect it to break it, in which case that would also be signaling a breaking of the downward trend line. Let's have a look at Euro USD now. Euro USD has been dropping, probably also as a result of USD strengthening. Let me readjust these levels. So that's better now. Note how the pair was aiming for the 1.0740. It didn't actually just reach it, no. It remained just below it and started correcting lower. It's characteristic that also the RSI indicator has been dropping, a clear downward movement, breaking below the level of 70, starting to aim for the level of 50. Once again, we tend to remain bullish as long as the price action remains above the upward trend line. Should the upward trend line be broken, we may see the pair's price action stabilizing just below or around 1.0605. Should the bears take over, we may see the pair breaking 1.0605, breaking also the 1.0480, even touching it, and start aiming for the 1.0355. So practically, for bullish outlook to turn to a sideways motion, we would require clear breaking initially of the upward trend line, guiding the pair since around the 12th of May. And to switch it to a bearish one, we would require the price action to break below the 1.0605, testing the 1.0480, which provided support once, twice, 3, 4 times. So we should take notice of this level. It was tested a couple of times. On the flip side, the S1 was tested as a resistance line once, twice. So keep it in mind as well. To the upside now, we would note also the 1.0740 aimed for here, here, and here as a support line. Should the bulls actually maintain control, we would expect the price action to reverse direction, break above the 1.0740, and start aiming for the 1.0935, which provided resistance once, twice, 3 times. So that's a quite interesting level to keep an eye out for Euro USD. Let's have another look now at Nzd USD and how that behaved. Oh, that was nice. The price action actually jumped at RBNZ's interest rate decision. It broke above the 0.6475 and is now correcting lower. Let's drill down to the 1-hour chart. Oh yeah, that's clearer. This was the moment practically when we had the interest rate decision. Let's go back to the 4-hour chart. Now, The price action has broken the 0.6475 and has now just been testing it, seems to be showing some signs of stabilization at 0.6475. Yet we would like to see a clearer movement as it's just testing the R1 to the downside this time. Nevertheless, such a testing would be consistent with the notion that the pair rose and is now correcting lower. Yet the bullish sentiment seems to be still there, given A, that the RSI indicator is still valid, and at the same time the RSI is still between the readings of 50 and 70 despite correcting. We maintain a bullish outlook for the pair as long as it remains above the upward trend line, which has started to form since the 13th of May. And we would expect practically the pair to rebound, break above the 0.6475 and start aiming for the 0.6555, which provided resistance around the 5th to 6th of May. Other than that, should the price action continue to drop and actually clearly break the pre-mentioned upward trend line, we would switch our bullish outlook initially in favor of a sideways movement between the 0.6365 and the 0.6475. Should 0.6365, that would cause us to switch the bias for sideways movement in favor of a bearish outlook. And in this case, we may see the price action breaking the 0.6365, which provided support once, twice, and resistance all the way here, and start aiming for 0.6290. That would practically mean that the price action breaks the downward trend line as a first stop and a first sign of a trend reversal, breaks the 0.6365, which would be signaling that the bias for sideways motion is now to be turned into a bearish outlook, and starts aiming, if not testing, the 0.6290, and that would be a signal that the bearish outlook has been confirmed. Lower than that, we also note the 0.6215, which provided support and reversed practically the downward motion of the pair on the 12th to the 13th of May. For the time being, we maintain a bullish outlook as long as the price action remains above the upward trend line, in which case, once again, we expect it to reverse direction, break the 0.6475, and start aiming for the 0.6555. Let's have a look at cable. Oh yeah. Note how cable practically dropped yesterday at the release of the preliminary PMI figures, and the market got a nasty surprise. The preliminary PMI figure for the services sector of the UK, which dropped more than what the market expected actually. Nevertheless, cable was able to resurface and actually stabilize. That's just above the 1.25 resistance line, which now has been turned into support. Let's make a small recalibration here. Take this. I like this one. Yet I would like to see some more confirmation here. There's none. On the daily chart. No, that's not a valid point. Let's raise it here. That's more valid. Yeah. Drilling down to the 4-hour chart. Realigning the chart. Okay, there is some distance here. It's far wider, but the support touch here tends to provide me more comfort. Let's color this red. 1.2965 locked. Then the next level in the R2 would be the 1.2775. $1.2640, and the resistance line now becomes to support at 1.25. With the S2 becoming the 1.2330 and the S1 being at 1.2170. Here it is. Nice, beautiful chart. Note how the Bollinger Bands have started to converge after the drop, which practically tends to imply that volatility is getting lower. It's characteristic that the latest 4 to 5 candlesticks after the correction higher have now become far smaller and tend to imply that, once again, volatility is at a lower level. We expect the stabilization after the breaking of the upward trend line to take place just above the 1.25. And it's characteristic that the Rsi Indicator below the 4-hour chart is a reading of 50. And actually could be implying that the bulls are still a bit present, but it's not so convincing. We would expect the stabilization to continue for the time being and to move around just above the 1.25. Should the bulls for any given reason take over, I would expect the price action to jump, test or even break the 1.2640 and start aiming for the 1.2775. On the flip side, should the bears take over, I would expect a clear breaking of the 1.25 support line, not something like this. On the flip side, on the contrary, I would expect a deeper cut lower, aiming for the 1.2330. That could be signaling a bearish outlook. Let's have a look at USD Jpy. The USD Jpy, which seems to be recovering. Note how practically across all pairs we see a US dollar which is weakening. Now the price action hasn't exactly reached this, right? But it will. Nevertheless, it's actually currently testing it. Let's have a new support line. Here it is. Oh yeah. That's a nice support line which provides support in the sideways motion here. Let's fix this. Color it in green and would be at 1.2345. Block. Realign. But there is a shift also of the downward trend line, right? Okay, that's nice. 1.2345 being the new S3. 1.2480, being the S2, 126, one. The R1 would be at 1.27, which is currently being tested. I wouldn't be surprised to see the price action breaking above it as we speak right now. Lower would be the 120, higher would be the 128.30. And as the last resistance line, we have now the 129.75. You have it. So the direction of the pair is still on downward motion despite the correction higher since the Asian session today. We would require a clear breaking of the downward trend line before switching our bearish outlook in favor of a sideways movement. And for a sideways movement, it would be between the 127 and the 128.30. Should the bears maintain control, we would expect the price action to hit the downward trend line, maybe even push it a little bit to the right side. I wouldn't be surprised on that. And reverse direction, start aiming for the 126, if not break it. Lower than that, we also note the 124.80 providing support here, while the lowest level noted for the bears would be the 123.45. Now to the upside, should the bulls take over, the first sign would be of the breaking of the 127, the breaking of the downward trend line, and the price action to reach the 128.30 even tested. I wouldn't be surprised to see it breaking the 128.30 should the bulls take over, in which case we may see the price action aiming for the 129.75, which provided resistance here and support here. So it was tested on both ends, both as a support line as well as a resistance level. The Rsi Indicator below the 4-hour chart seems to have some slight upward motion, but it's still between the readings of 50 and 30. The bearish sentiment is still present, but seems to be losing some steam. It's interesting that the price action practically corrected after it broke the lower Bollinger Band. And this highlights that practically it got out of the deviations and returned back in. So once again, the bearish outlook seems to remain present as long as the downward trend line remains intact. Let's have a look at it. Oh yeah, that's nice. Now yesterday had set as a new resistance line the 0.7125, which has been confirmed. So let's lock this. It was confirmed, and the price action seems to be breaking the upward trend line, despite, I would dare to say, the upward movement in today's European session that has moved downwards. And it may be the first case when we see such a clear downward movement of a currency against the US dollar today. Nevertheless, and as it seems it will be, should the upward trend line be broken, we would switch our bullish outlook in favor of a bias for a sideways movement. Let's readjust this. This would provide a clearer picture. And that sideways movement would be between the 0.7125, which provided resistance here, 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 and support here, and the 0.7035, which provided resistance here and support here. So that's the space we expect. the sideways movement to move for the pair. In case the sideways movement and the stabilization of the pair is not enough, we may see the bears taking over. Actually, we may see the price action breaking the 0.7035 should the bears take over and start aiming for 0.6950, which provided support here. As an ultimate target for the bears, we would set the 0.6840. Side, should the bulls take over once again the reins over the pair's direction, we would expect it as a first sign to break the 0.7125 and start aiming for the 0.7180, which provided resistance here. And higher than that, we also note the 0.7265, which provided resistance here. It's actually a very interesting chart on how it's going to be behaving. If it's going to be able to actually break the upward trend line, or finally succumb to the bullish tendencies and move higher, breaking the 0.7125 and maybe even 0.7180. Let's have a look at Safe Haven CHF. Oh, that's nice. Safe Haven CHF, we noted the movement of the Rsi Indicator below the reading of 30 and that it had reached oversold levels. It's just about to break the level to the upwards. Note the correction, which seems to be breaking both the downward trend line. Should the downward trend be clearly broken, that would be a sign for a switch from bearish outlook in favor of a bias for sideways movement between the 96.70 and the 95.50. Now, should that not be enough and the bulls take over, say for example, if the US dollar weakens even further or more intensely in the American session, we may see the price action rising, breaking the 0.9670, which provided resistance here and support here, and actually aim for the 97.60, providing resistance here and support here, resistance again here. As the ultimate target for the bulls, we would be setting the 0.9875, providing resistance and capping the price action, maintaining it lower, somewhere here. To the downside, should the bears regain control and actually just shift the downward trend line to the right, we may see the price action breaking the 0.9550, providing support here, and resistance here, and start aiming for 0.9410, providing support here, while the lowest level noted would be the 0.9285, which tended to provide support here. Note how the price action dropped and bounced on the lower Bollinger Band. At the same time, the Rsi Indicator is still pretty close to the reading of 30 despite an upward slope. So the presence of the bears is still to be felt. It would not be rational to worry about the bears retaking control over the pair's direction and driving it lower. It's a very possible outcome. On the flip side, the breaking of the downward trend line tends to imply some stabilization. But we would have to wait and see in the American session how actually the pair behaves in order to draw some safe conclusions here. Definitely. Let's have a look now at USD CAD and wrap it up. In a sideways motion, just below the 1.2855, I'm actually tempted to place another resistance line here, but I would like to test it before anything else. So we would expect the sideways move to continue, given also that the Rsi Indicator runs along the reading of 50, implying a rather indecisive market. market. Some slight bullish tendencies may be present, but given the weakness of the US dollar, CAD, should that weakness of the US dollar continue, we may see USD CAD dropping. The key point, though, is whether it will remain between the 1.2855 and the 1.2757 to see that the sideways motion is to continue. The drop, which was instigated around the 18th of May, has been broken as the downward trend line has been broken. And that shows us, or at least is another of stabilization. Thank you for watching. We hope that you found it useful. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily and today I'm going to give you a short walkthrough of our website. Let's get started. So this is our main page. On your top right corner, you see the option login for existing clients. And then you see the option register. So if you're not an existing client, we should fix that, right? And then we have the search bar, and from here you can choose the language that you want to use with us. Then we move on to markets. With IronFX, we offer over 200 trading instruments. For example, we have Forex, metals, indices, commodities, futures, shares, and cryptocurrencies. Moving on, we're going to this option right here, trading. You can find the account types, spread comparison, and a couple of trading tools. So I want us to check out the account types today. If you scroll down, you'll be able to compare the IronFX account types. You have two options right here, the live floating, live fixed spreads, and the STP ECN accounts. So with the first option right here, you have 4 different account types. We have the standard account, the premium account, VIP, and live zero fixed spread. Here you have the CFD instruments, the minimum lot size, base currency, spread, commission, and we click on expand full list, and we move on to the flexible leverage, stop out. We also offer swap free and Islamic account option. And this right here is called dedicated account manager available. So as soon as you open the trading account with us, one of our representatives will give you a call and start assisting you with your experience with IronFX. Moving on, we have the dealing department transaction hotline. Then we scroll up again and we choose the STP ECN accounts. Here, the difference is that you have 3 account types, no commission, zero spread, absolute zero. And again, we have the CFD instruments, minimum lot size, base currency, spread, commission, and we click on expand full list. And you have the flexible leverage, stop out. The difference here is that we do not offer the option of a swap-free Islamic account, but we do offer the option of having, again, a dedicated account manager and the dealing department transaction hotline. So after comparing all of your options, comparing the account types and finding what suits better your own needs when it comes to trading, you just click on register and you proceed with the account type that you wish. Then we scroll up again and we move on to platforms. As you see here, we have MT4, WebTrader, VPS hosting, PAM, and Trade Copier. Then we move on to the IronFX school. When it comes to this option, I truly believe that every broker should have this option for their clients, even if you're a beginner, even if you're an experienced trader, because at the end of the day, knowledge is power. And you see loads of options right here, but I want us to check out the newest addition, which is webinars. So here you see live Forex webinars. It is free of charge. You're not going to pay a single cent when it comes to this. You just need to register with us and get started. If you scroll down, you'll be able to see the webinar that suits you better. Which webinar is best for me? So we have beginner, intermediate, expert, and then you can, of course, view them all. Then if you scroll down, you'll be able to see which webinars are we hosting at the moment. You have English language, Spanish, Portuguese. You can just simply click on register and that's it. Then moving on, if you scroll down, you will be able to see our educators. That's all you have to know when it comes to our webinars, but obviously if you want to know more, you should tune in and watch one of them. Then moving on, we have this option right here, which is blog. So basically here you can get inside information when it comes to Forex news, the market, and also you can get some successful tips when it comes to trading, which is actually very cool. And the next option we see here is promotions. As you can see here, you can check our trading competitions and etc. And then we have the option right here, which is partners. So as a company, we want to build a very strong, long-lasting business relationship with our clients. So that's why we offer you this partnership program. So for example, we have the introducing brokers, the affiliates, and the white labels. And then last but not least, we have the IronFX option. So whatever questions you have or whatever information you need regarding the company, you can just simply click here and you can see why us, careers, legal documents, frequently asked questions, sponsorships, awards. And if that is not enough for you and you want to learn more, you can, of course, contact us using our live chat support or by email. So that's it for today, guys. Thank you so much for tuning in and watching us. And I hope I'm going to see you very, very, very soon for our next short version of a walkthrough. Thank you very much. Have a good one.
Hi, everybody. I'm Kristala. I'm Kristala Zezu. I'm the marketing manager at IronFX. Thank you very much for joining this session. And today we're going to go through our latest, let's say, promotions. And I would like to introduce you more into the, let's say, latest competition we have running. It's really it's a huge one, and it's really interesting for traders, and we have been getting a very, very positive, let's say, input from everybody. So it's coming to an end of May, so there is not much time for new registrations and new traders to join us now, but no problem. We're gonna be launching a new one very, very soon, which is gonna be an even more exciting one. So stay tuned. So I will be now sharing some, let's say, more information. So here you see this is the website, IronFX website, and you can even see the slider and the cover dedicated to the competition. The next Iron Trader, we wanted to create this, vibe that, it's, it's a, let's say, a very competing, let's say, um, um, a promotion for the iron traders, the hardcore ones, and this was the thinking behind this, let's say, competition that started in March. If you guys have been with us for quite some time, you may remember the previous one that we did run, and it was a very huge one. To be honest, it was the Iron World Championship. It had, let's say, 6 month duration. It was a 1 million prize pool, so it was really exciting. Now we launched this one back in March, and we're getting close to launching another one. I cannot say much at this time. It's very early. I want to be teasing more in coming sessions, but at the moment, this is pretty much everything I can tell you more about. So just bear with us. So this is the website, and this is just a slider. If you go here and click on the tab, the next Iron Trader competition, you will land here, which is the dedicated landing page that we created for the competition. It has everything that you guys should know, and its duration, requirements, the price pool, the different prices, and everything that will help you understand the entire process and how you can, let's say, be one of great winners. So let's just slowly, browse through it and, go over it and explain. And I would like to actually get your feedback on the chat. Your feedback is very, very helpful for us, and we want to be doing more and more that are both interesting and yet, useful. So your input and your comments, any idea that comes to mind, just feel free to share them, drop them there on the chat, and we will we will implement it or consider it. This is how your feedback can make us, provide a better experience to you first. So be my guest. So now here is what you can see. Now it's the, let's say, representation of the cash prices. We have two different ways, let's say two different models of, let's say, rewarding our winners. So we have three big winners based on the highest percentage of profit. And it's the first prize, second and third, as you can see. And then there is another prize, additional one, a fourth prize, let's say, the most exclusive one, which is for the person, for the trader that within these 3 months, March to May 2022, had the, let's say, highest trading volume. So this is the cash prizes. Then we have, for every month, we have a lucky draw as well. So March, it was the first, and there is even more to this for our participants, for you guys. And this is what 3 lucky winners got for in March, in April, and now at the end of this month, there is going to be another one, in addition to the cash prizes that we just mentioned. Again, for this case, it's just, it's a draw. It's totally random. So then we have to go, and these are the steps how to enter. You create a competition trading account. I'll explain how you can do it. Not now, but it's for the next time. So you guys are very familiar with the process. It's not going to be changing because the process is like something that we want to keep standard for you guys to follow and be able to easily do every time we launch something new. We don't want this to be a rocket science test for anybody, because it should be simple and very, very transparent and easy. So this, you open a trading account under the competition, you deposit a minimum amount. In this case, for this competition, we had set the limit at 2,000, and then you just start trading and you just do your best, trade with your gut, and hope to top the rankings. Okay, so we're sharing here some more information about past competitions. It's actually the past competition only in numbers. It was the last one I just described in the beginning. It was like the IWC Iron World Championship, which was the 1 million competition that we launched in the second, let's say, semester of 2021. It ended in it was in December, mid-December. So this was the performance of that competition, because we want to be transparent. We want you guys to feel confident and safe, and um, very, let's say, uh, secure to do and register and do more with us and trade and never miss any of our competitions in the future. So this is the logic. Okay, so now we have the rankings. This is the rankings based on the percentage of profit and then based on the traded volume. All right, so if you had the only thing that you had to do to register is actually click on the buttons, and it will take you into a form where you could just enter your details, your email, the nickname they would show. You want yourself to show in the rankings, for example, and it's something that you only know. So this is pretty much the process of registration. Then you get into the portal and you make the deposit and start trading. I'm sorry, let's go back. And this is pretty much what our latest competition has been about. And as I already mentioned, we're preparing something more exciting for you guys. It's not going to be just amazing cash, be amazing experience packages as well. You're going to be actually enjoying yourself in and finding yourself in a unique experience and enjoying your cash prizes as well. And it's gonna be huge. It's gonna be very interested. It's gonna be a different concept, maybe a different, most probably a very different layout and look and feel, because we want this to be a very unique and feel unique each time. We just don't want to be repeating ourselves, and we want you guys to, get the feeling of the excitement that we're feeling behind the scenes, building this up for you. So this is pretty much everything that you had to know about this one. We just want you to, um, um, stay in the loop and look out for the next one. It's coming soon. And whatever you have to, to recommend, or any ideas that would actually make this or the next one an even better one, please write us in the chat. We're gonna be going through your comments, and every time there is this, let's say, interaction, and we will be evaluating and implementing everything. So this is pretty much it. Thank you very much for joining today. Thank you very much for sticking with me, because it's actually the very first session I'm doing. So I don't know, it's okay. So thank you very much. And there is going to be the next session tomorrow live. And make sure you don't miss that one again. Okay. Thank you very, very much.